My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Another great episode. Today, zooming in all the way from Hollywood, Florida, not Hollywood, California. We have a very accomplished capital raiser, person who helps other people raise capital. We've got LaVonne Idlette zooming in. And today we're going to be talking about something different, something new, something I'm curious about, something I don't know very much about, and that is family offices. So, LaVonne, welcome to the show. Great to have you here.
Thank you so much for having me. I'm excited to be tuned into actually one of my favorite provinces. I love Vancouver. It's one of my favorite cities in the
Ah,
world.
well, thank you very much. So, LaVonne, first things first, lots of people have heard of family offices. I can tell you what, when I first heard the term, I was clueless. I thought, okay, hey, it's a family office, owns an office. I don't know what. So can you maybe give us the definition of what is a family office exactly, especially when it comes to real estate and real estate investing?
Yeah, so the way that I like to describe it to people is think of all of the things that you think that a bank does, an insurance broker, and a wealth advisor, and put it all together, but only for one family. So instead of having the focus and the need to go out and get lots of clients and spend money on sales, you have this like dedicated team to make sure that one family is preserving, growing and their wealth, but also protecting it and preparing the next generation for running generally what is also a family business. Um, so most family offices are started by a person that has a business that's operating, and then they build on top of that to protect the people involved and also the business.
Okay, very good. That is helps clarify things. So at what point, or typically what kind of net worth do people have for it to make sense for them to consider opening up a family office?
So for most people, when they are like, I'd say around the $10 million of investable assets is where I see most people start getting involved with multifamily offices, where it's not as high of an expense to do everything just for you, but you get the focus if it's only 4 or 5 families.
So it's kind
Um,
of like a fractional
exactly. A
ownership of
fractional
it.
office.
Yeah, because that gets confusing.
And
Multifamily, family office. We're talking about real estate. I get it though. So a bunch of relatively wealthy people share kind of a family office, so they have a fractional
yes.
participation in that. Okay.
And I like to tell people the investable assets number because net worth can be nebulous. It could
Yeah.
be that you have a huge net worth, but no actual capital
Cash.
that can be moved around. And it can be a capital intensive onset in the beginning to staff the people and get the spaces and things like that.
All right, very good. So maybe walk us through, what does a family office look like? Let and let's say, what kind of investable assets does somebody need to have their own dedicated family office? At what point does that make sense?
Probably around 50 million is what I see mostly. And you that family office would still be considered small, but you'd be able to have your own analysts and things like that who are looking for opportunities to invest. Um, at that level, most people are doing a lot of direct investing still, which is a great place for people to raise capital.
Mhm.
Once you get the big dollar amounts, they stop direct investing because it's just too much paperwork and it's confusing, and you end up with like way too big of a staff. So if you are like the type of person who wants to start doing deals with family offices, you want to be with people who are between probably 10 and 200 million.
Okay, very good. So where do you come into play in this whole scenario? Do you help people set up family offices? Do you help investors connect with people that already have family offices? What do you do, LaVonne?
So I help people who have either just sold a business, got into sports, or something of that nature, or they just have like figured out a way to amass a lot of money by investing. I help them set up family offices or multi-family offices connecting. And I also help them get to know each other and vet deals.
Interesting. How did you get into this whole field? That sounds fascinating. What's your
So
backstory?
the the backstory is pretty funny. So am a securities attorney. So I've been involved with family offices and investors for a very long time. And I actually didn't know what a family office was at the time. So I was just helping people create funds and syndications and things, and people get wealthier. And then I started going to these like alternative asset conferences and met a few families that were operating their own offices. And then getting to know them and helping them with things like intergenerational knowledge sharing, which I think is like the most value there, because like money can only last as long as people know what to do with it. And
Yeah, don't
so
don't blow it, right? So it's the old saying
exactly.
by I can't remember what it is, from bootstrapping back to bootstrapping in three generations or something like that, right? Yeah.
Exactly. Because what happens over generations is people just they make their children's lives softer and softer. They have no idea how to like overcome challenges and
Yeah.
deal with the things that come with business. And then they also are spending money at a much higher velocity than the people who earned it. Um, and so that made me really interested. And then I started having more conversations with my own family. So my grandfather has owned orange groves since the 1950s.
Wow.
But he's literally lived in the same house. We've had no inflation until this year on our birthday gifts. And I never knew that he had amassed so much wealth until we started talking about a succession plan because he retired when I was a child. So like I literally had no idea. They go on vacations. We've never missed a meal. You know what I'm saying?
Yeah.
But when we started talking about, okay, these are all of the assets and it needs to take care of 18 adults and 10 children.
Wow.
So I basically built us a virtual family office because I did not want the overhead expense. And it led me down the path over the last 8 years of sharing that with people who were also, so I was a professional athlete, by the way. So I had a lot of friends who are also professional athletes and just saying like, okay, so this is what I did and this is how we are investing and this is the conferences that I'm going to meet other people. And then I just started finding other people who are great vendors who wanted to service the group, who actually cared,
Yeah.
not just about receiving the fees, but like making sure that they weren't treating the people sort of like just another number or a check.
Got it. Fascinating. So your grandfather did very, very well for himself and for the family. It's kind of got you guys set up. Just out of curiosity, what sport, what's your sport?
I went to the Olympics for track and field.
Wow. Congratulations.
Thank you.
And very, very cool. All right. So you've been involved in this whole space for quite some time now, LaVonne. What are some of the bigger mistakes you see wealthy people making when they're either not clued into family offices or they're just kind of floundering around? What are some of the things that you're really helping your clients out with at that level?
Um, I see two extremes. So
Yeah.
one extreme is just complete prudence, where they're just like, I'm not investing in anything. Everything sounds too risky. Give me treasury bonds, right? And just like sit some money in a checking account. And they look at deals, but they're so afraid to ever go back to whatever the starting point is that they're
Mhm.
just like not doing anything.
So would that
And
be first generation wealth type people? Is that what you're talking about there?
mostly,
Yeah.
but some of it is second generation because they're afraid of making the mistake that the family will look at them like, oh my gosh, it's your
Yeah, because
fault that we're all broke.
they weren't the ones that made it, but they're the ones that are entrusted with. preserving it.
Exactly.
Got it.
And so for them, I help them bridge the gap to bringing on more knowledge, so that they can have more confidence in making the decisions and vetting the people and vetting the opportunities. And then the complete opposite extreme is everything sounds so interesting and the returns are going to be so great. And they've given the money away in a way that I'm just like, so where's the contract? Who are the people? Why? Like, this is too much trust too fast. And this is something you don't understand at all. Like, what do you mean you're in um oil futures in Singapore? Like, you don't know, you've never even been to Singapore. So it's like you've gone too wide.
Yeah.
So I am very much a Warren Buffett type person. So I stay in my circle of competence. And then I surround myself with people who also have like deep knowledge. They can say, yes, no, here are red flags. Because if you don't know things, then it's hard for you to say this isn't good, because no one presents you a mediocre opportunity, or nobody presents you bad news. It's going to
Yeah,
be
the
like,
numbers
this
always
is
tend to look
the
quite good. They're rosy
exactly.
projections. Yeah, I get you.
Exactly. And I tell everybody, if this was just a MBA level project, everybody would pass. Now, who can actually deliver the things is an entire separate set of skills to be able to discern.
Yeah, most definitely. That's where you're getting into the PhD for sure.
Mm-hmm.
Interesting, LaVonne. So maybe tell me a little bit about your business and what you do. So what who are you looking for? Who's your ideal client? What kind of services do you offer, LaVonne?
Yeah. So my ideal client is a person that has capital or high income, and they're looking to create a strategy, whether that is creating a family office or not, but around passive investing in alternative assets. So alternative assets is literally anything that's not stocks and bonds. So my alternative of choice is obviously real estate and real estate notes, but like the gamut is out there, besides real estate and real estate notes. And so I just help expose the fact that these opportunities exist, and they're better and less correlated to the emotions of the market and the current state of affairs with the news. And I help set up the asset protection strategy and give them access to these types of deals. Because
Okay.
if you are not a super wealthy client of UBS, you generally just don't get offered um alternative opportunities, especially if you're just not like a person who goes to a lot of events and know people who invest in multifamily or whatever. Because the truth is the people who are investing are busy, and they're not necessarily tapped into the down the street dentist either.
I hear you. I hear you. Fascinating, LaVonne. So it sounds like you do a couple of things. One thing is you've got the legal side of things, so you can help people set up family offices or virtual family offices or fractional participation in multifamily offices,
Yep.
funds, and those kind of things. And then you also sounds like you are fairly actively involved in real estate
Mhm.
and bringing opportunities and raising capital for deals that you're personally involved in. Am I understanding that correctly?
Not that I'm personally involved in.
Oh,
So
okay.
I went from being a person who was like I'm the overly ambitious. If I want to do anything, I have to do like the most.
Yeah.
So I'm like, I want to have 30,000 units because that's the most units that a person in the South had. What I realized very quickly is that I don't enjoy the operations part of real estate. So
Yeah.
from there, I do still own a multifamily building. I am still involved in some day-to-day stuff because my dad is a developer, but
Mhm.
I don't I spend more time meeting operators who are like great and love it and passionate, and I help them find new investors, find family offices that want to their funds and syndications and things like that.
Ah, I see. Okay.
We
Very,
also
very cool.
finance. Mhm.
Very cool.
Uh-oh. Yeah.
Excellent. Well, LaVonne, time flies when we're having fun. If people would like more of you and they'd like to connect with you, where should they go? What should they do?
You should follow me on Instagram at Lala Hurdles 2. 2 is a number. So Lala is LALA in hurdles. I did the 100-meter hurdles in the Olympics, so it should be easy for you to remember that.
That makes sense now. LaVonne, it's been an absolute pleasure. Thank you very much for your time.
Thank you so much for having me.
All right, everybody, take care, and we will talk to you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.